Welcome to This Explainer. Today, we're tracking the fascinating journey of a true economic underdog, the Indian rupee, and its incredibly ambitious quest to step out of the shadows and go truly global. You see, for decades, the global financial system has basically been an exclusive club, with a very clear boss at the head of the table. But shifts in global trade, geopolitics, and, well, sheer economic necessity are creating some serious cracks in that status quo. And India? India's stepping right into those cracks with a massive master plan.
To understand why, let's rewind a bit to August 2023. The Indian rupee hit a historic low, crossing 83 to a single US dollar. Now, for an everyday consumer, sure, that means imported goods get a bit more expensive. But for a nation that happens to be the world's third largest importer of crude oil, that exact economic vulnerability is a massive wake-up call. I mean, buying essential energy in a currency that's constantly fluctuating and getting stronger against your own money is just incredibly expensive. And it's precisely this pressure cooker environment that sparked a total shift in India's global economic strategy.
Here's how we're going to break this all down today. We'll start with the dollar dilemma. Then we'll examine the mechanics of rupee settlements, look at the India-UAE milestone, discuss the roadblocks and imbalances, and end on the path to global status. Okay, let's dive into this.
Section 1. The Dollar Dilemma. Overcoming Dominance.
So for emerging economies, relying on a dominant foreign currency is becoming a major and, let's face it, increasingly expensive pain point. Which brings us to the big question. Can the rupee actually challenge the almighty dollar? It sounds like a total David versus Goliath scenario, and frankly, it is. The US dollar has literally been the undisputed ruler of international finance, trade, and investment for almost a century. So the rupee is facing a massive uphill battle against a deeply entrenched heavyweight.
And this brilliantly illustrates exactly how steep a mountain India has to climb. Look at this 2022 data. The US dollar commands a staggering 88% share of global forex turnover. In the Indian rupee, just 1.6%. The entire global financial architecture is effectively built out of dollars. To even achieve real global recognition, India's own economic survey suggests the rupee needs to hit at least a 4% share in the coming years.
But you might be wondering, why try to climb this mountain at all? Well, think about what happens when the US raises its interest rates to fight its own domestic inflation, like that massive 0.75 percentage point hike we saw back in 2022. When that happens, portfolio investors instinctively pull their money out of developing nations. They exit emerging markets to chase those higher, safer yields over in the US. And this mass exit completely punishes local currencies, drains foreign exchange reserves, and drives up the cost of imports. That external vulnerability is exactly what's driving this fierce desire for a structural alternative.
Section 2. Mechanics of rupee settlements. Bypassing the dollar. Let's move to and see how this builds.
So how does a country actually bypass the dollar in international trade? The core of this strategy is a concept called de-dollarization. Now, this isn't necessarily about wiping out the dollar entirely. It's a strategic effort to just reduce reliance on it. By invoicing and settling trade in alternative currencies, nations can basically shield themselves from sudden economic shocks, imported inflation, and even foreign policy sanctions. Think of it as an insurance policy for a country's financial sovereignty.
Of course, to make de-dollarization happen, you need the right plumbing, and the core mechanism driving this is something called the Special Rupee Vostro Account, or SRVA. Let's demystify the banking jargon here. Unlike a Nostro account, where an Indian bank holds foreign currency abroad, an SRVA acts a lot like a financial group chat, where an Indian bank holds rupees on behalf of a foreign bank. If an Indian importer wants to buy goods from a partner country, they don't have to go buy dollars first. They just deposit rupees straight into that partner country's Vostro account right there in India. The partner country can then use those accumulated rupees to buy Indian exports. It's pretty brilliant.
And our underdog is rapidly laying down the tracks for a whole new trade railway. The Reserve Bank of India has aggressively streamlined this whole process, clearing out previous procedural hurdles. Because of that, the RBI has already approved 156 of these special rupee Vostro accounts for 123 banks spread across 30 different countries. So the momentum is clearly building.
Section 3. The India-UAE milestone, a real-world victory.
All of this banking theory is great, but, does it actually work in practice? Well, check this out. This cargo ship represents 1 million barrels of crude oil bought by the Indian Oil Corporation from the Abu Dhabi National Oil Company. But crucially, it wasn't paid for in dollars. No, it was settled entirely in Indian rupees and UAE dirhams using a local currency settlement system. This is an absolutely incredible breakthrough because the energy trade is traditionally the strongest fortress of the US dollar, often referred to as the petrodollar.
What this does is create a really brilliant circular trade economy. Step 1, India buys crucial resources like UAE crude oil and gold using rupees. Step 2, the UAE accumulates a reserve of those rupees in their Vostro accounts. And step 3, the UAE turns around and reuses those exact same rupees to buy Indian exports like gems, jewelry, and machinery. The whole shebang stays entirely within their bilateral ecosystem. No one has to pay a fee or a spread to convert their money out into a third-party currency.
Now, what's really interesting about this slide is how it highlights the real-world impact for everyday businesses. Trading in local currencies entirely bypasses those wild, unpredictable market swings. It completely removes the hefty hedging costs that businesses usually have to pay just to protect themselves against dollar fluctuations. That makes export pricing far more competitive and minimizes risk for both smaller businesses and massive corporations, letting them anchor their ledgers in currencies they inherently understand and actually use.
Section 4. Roadblocks and imbalances hindering momentum.
So, while the initial tests have been a huge success, there's a massive, literal roadblock standing in the way of this momentum: $57 billion. That staggering number right there is India's trade deficit with Russia. You see, India buys a massive amount of oil and defense equipment from Russia, but Russia doesn't buy nearly as many goods back from India. And that massive deficit creates a pretty harsh reality. The supplier, in this case Russia, ends up sitting on an absolute mountain of rupees. But since the rupee isn't exactly universally accepted yet, Russia can't exactly take those rupees on a global shopping spree. Because of this trapped surplus, foreign suppliers are understandably hesitant to accept the currency for major settlements. I mean, if you can't easily spend the money you earn, it's just not a highly attractive reserve to hold.
Furthermore, the rupee isn't the only currency vying for the dollar's crown. The Chinese yuan is the rupee's main geopolitical and economic rival in this space. And we have to be objective here. China has a massive natural advantage. They command over 12% of the global export share, compared to India's sub 5%. Because China produces so much of what the world wants to buy, holding yuan is extremely useful for other countries. In fact, reports indicate that a staggering 95% of Russia-China trade is already settled in yuan, which significantly limits the rupee's appeal as an alternative right out of the gate.
Section 5. Path to global status, structural evolution.
So the crucial point is, what's the way out? How does India break through these massive roadblocks? Right now, the rupee is fully convertible on the current account for things like daily trade, but it's only partially convertible on the capital account, meaning there are tight restrictions on foreign investments and large-scale capital flows. If India wants the rupee to truly achieve global reserve status, it needs near-complete capital account convertibility. However, giving foreign investors that kind of freedom means the central bank will have to relinquish some of its tight, protective control over the domestic money supply and interest rates. It's a massive, delicate trade-off between global influence and domestic safety.
Knowing this, the government is rolling out some heavy-hitting pipeline measures to gradually build global trust and deepen market liquidity. They're aggressively expanding currency trading in the Gift City financial hub. They're extending their own financial messaging system, SFMS, to act as a potential rival to the Western-dominated SWIFT network. They're easing rules for non-residents to hold rupee accounts abroad. And the ultimate goal? Aiming to fulfill the rigorous conditions for the rupee to be included in the International Monetary Fund's elite special drawing rights basket.
Which leaves us with this final, truly provocative thought. As India slowly chips away at the dollar's dominance alongside other emerging economies, are we entering a truly multipolar currency world? The rupee's journey from a heavily regulated local currency to a global contender is fraught with massive trade imbalances and fierce geopolitical rivals. But if this underdog actually pulls it off, it won't just transform India's economy. It will fundamentally rewrite the entire global financial landscape.